So the big question is, do we go up or down right now in the crypto markets and Bitcoin? Everyone's asking me this, and so in this video, I'm going to talk about Bitcoin and some of the other alts, total market cap, and some other studies that I'm watching to figure this out. But the answer is, I don't know. It could go either way. So let's take a look at this chart of Bitcoin here on the screen. And so on the one hand, I've just identified that we have a potential head and shoulders forming, which is a bearish setup. I know everybody wants to think this is going to go higher, and I tend to think it is, which I'll get to in a moment. But at any rate, we have to be aware of this head and shoulders setup that is forming. We have the left shoulder here, we have the head here, and then we have this right shoulder. So the big question is, does this break out and do we continue on with the M3 or the M2 global money supply coming into the markets? My next chart, we're going to look at that. But if we fail to do that, and the reason that I'm concerned after this bounce here is we have 4 days of lower highs on the wicks and also the real candle body. We're coming into the close here on Friday, so it doesn't look like it's going to break back above that 21-day exponential moving average. We did hold at the 50-day exponential moving average, which is great. And one of the patterns that not many people talk about, because I don't think anyone really has seen it before, is typically these large candles here. Some call it a vector candle, some call it a fair value gap. You can Google these things. They're a little more advanced, but typically and often we see those retest the midpoint, at least I do. So it acted as a magnet to come down in that range, hasn't quite touched it, but on the one hand, I think that this is a strong area of support for 2 reasons. Actually, 4 reasons. One of which is the 50-day exponential moving average. You guys have heard me talk about this. The thin ice and the thick ice. If you're going to go out on a lake and go ice skating, you want to be on thick ice. Isn't that right? So this 50-day EMA is a stronger ice. It's thicker. To get below that is bearish. You're sort of drowning there like a lot of the altcoins right now. So I'm more bullish on Bitcoin and Solana, not so much on Ethereum, but we'll get back to that. This green box here is money flow. This is one of our indicators, part of our early reversal indicator pro, showing actual money flow. This is the ETFs coming in big to buy up Bitcoin, and they tend to respect and support the midpoint of these buy blocks also. We also see this lighter green or darker faded green, depending on how you want to say it, also part of one of our indicators called the order block detector. The difference is this visualizes the concentration of buy limit orders, buyers saying, I will buy Bitcoin from 97K all the way up to 100K, 100,500, and the midpoint is right here at 98,700, give or take. Very often we see price come down into that midpoint and then bounce. So I'm a little leery here that we don't see a deeper drop, as we can see with this arrow there, from current prices, drop down to that midpoint and then go higher. The problem with that would be that then we'd be missing or losing this nice formatted upward trending parallel channel. That's a mouthful, but one of the things, I like simple TA. I don't do a lot of Elliott wave or Fibonacci circles or Gann fans. You don't need it. These are simple patterns that tend to work very well, these parallel channels. So we have 2 data points here. If we were to come down into this range, technically we could maybe redraw this. I don't like to keep redrawing my channels because then it's sort of making it fit to what the scenario I think it's going to be. So we'll have to wait and see on that. So we either have this head and shoulders setup triggered here by this early reversal indicator, the red arrow is one of our proprietary signals. By the way, if you like our signals, go on over to cryptomastery.org. I used to own an option trading education company, old habits die hard, cryptomastery.org. For these signals, and these are the best signals I've ever used. We've made a couple of accidental discoveries, and you see me talk about them every week. These are better than anything else out there, and yes, even the cipher, market cipher thing, whatever. So these are very powerful. It's simple to use, and check that out over at cryptomastery.org. So back to the charts here, and by the way, if you like this content, please do like that and comment and subscribe. I will be doing more of this. I'm being told we're top 3% out there. People generally like this no-nonsense type of TA, and I will get into some altcoins and specific recommendations on what to do next. So again, my name is Brett Fogle from Moonstream Crypto. That's moon like the moon and stream, and you can find us at moonstream.io. So back to the charts here, back to what I'm looking at. Now on the bullish side, we have a bullish divergence forming on our RSI Pro. And the way to read this, it's similar to a standard RSI, and we saw things getting overbought here the last couple weeks around the 21st, and this was one of our other signals flagged, and this was overbought here, obviously, and we had let's see, make sure I line that up. We had our early reversal indicator, this arrow here, and a bearish engulfing candle. So that was why I sold Bitcoin at 110,000, publicly stated on my Facebook. Got a lot of hate for that, but I was right. So what I'm seeing now, though, is a more bullish scenario on the daily charts anyway for the RSI Pro here. This there's a little text there that's a bit of a bug we'll fix. But these bullish divergences are great and often an early indicator. And it's pushing back up to get above that 50% line. So I'm looking kind of bullish. I think the bottom is in most likely. Also from a cycle perspective, we've been watching this and waiting for the June 6th cycle low. If any of you are fans of cycle theory, you might realize that around that June 5th, June 6th time frame is a daily and weekly cycle low. And that's generally when Bitcoin doubles in this phase of the bull run. We saw one back here, saw a nice 50% move from there to there. And so if we get one and it confirms and we break out to the upside, then we're off to the races. And I think 150K Bitcoin still possible in June. That's right, still possible in June. We'd have to go vertical, but we've seen it before in the parabolic phase of prior cycles. Maybe it goes into early July, but in the next chart I'm going to show you, I think we have then a 20-30% pullback in Bitcoin, see some altcoins run, but then we'll have a secondary push into maybe September. I don't think we'll make it to October. We'll see, but I do think 200K is still on the table, and I'll show you that study here. So stick with us and stick with me here. All right, so that's the bullish scenario. These other signals oversold my trend strength indicator, trying to push up. So we can see that go green over the weekend, and what I'm really looking for is the price to get back above that 21-day exponential moving average. However, we still have quite a bit of sellers. These red blocks are where the sellers are. There's an Italian restaurant 4 doors down from me, and they all wear t-shirts that say, "The Italians are here," right? So this is telling me the buyers are here, the sellers are here. It's been an amazing addition to our indicator stack and has been very powerful. So we're always buying in green and selling in red. So even if we push up, probably pull back and then onward once we get into price discovery zone on Bitcoin. All right, let's take a quick look here. I'm going to go backwards here and just look at the 1 hour, 4 hour on Bitcoin here so that we can see what's going on. Not telling us a lot. Our trend strength indicator rolling over shows me more downside on the 1 hour chart. Depending when you see this, so we probably have headed lower for a little bit and then possibly going higher. The 4 hour also getting a little bit overbought, a bit more inconclusive. So I'm not really sure. Again, I think the buyers are down here at 99K to 100K. And if we lose that level, I do think we'll rally out of that if we go down. But if we lose that level, then we would see the next, the measured move on that head and shoulders. If we were to lose this 98K level over here, the measured move on that would be down to this 90K level. Now, why is that significant? There's also an open CME gap there and an open gap on the IBIT 4 hour chart. Not many people, in fact, I'm the only person I think talking about the 4 hour IBIT chart and the gaps there. So we really could go either way on this chart. So let's we're moving our way toward that. Here's a chart of Bitcoin and the global M2 money supply. The yellow line is the global M2 money supply, and there's various indicators out there that show this. This particular one it's a combination of the Fed, obviously the U.S. Federal Reserve, European Central Bank, the People's Bank of China, the Bank of Japan, and also includes the reverse repo markets and also some of the money supply over here. So central bank liquidity and money supply all factored into this with a 10-week lag plus 2 days. I've found 72 days works best. So we can see that this is lining up, showing this. The M2 took a dip right here, and so Bitcoin is just following that dip that the M2 had, and also shows we might have one little more throw under here. So that would coincide with going down to that sort of 98K level along with those other signals. So I do have limit buy orders on Bitcoin at 100,000 and 98,500. Got within a hair of it last night. My Solana orders did get filled at 142. I'm happy about that. It's bounced up to around 150, and that was in the middle of one of our buy blocks. So I'll show you that. All right, so this is Global M2. Pretty soon into the weekend, maybe we want to put in a Sunday weekly candle close, and then Monday we roar out of here. But it's too early to tell based on this, so we'll have to keep an eye on that, and we'll keep on going and show you this here. So this is interesting also. I've been doing a study on the IBIT, the BlackRock ETF, the BlackRock IBIT ETF, that's a mouthful, since its inception on a 4-hour chart. So we had this little cup and handle breakout with that green arrow, and I started to notice that these gaps in price, similar to the CME gaps, because the IBIT is now a Wall Street product, closed after 4 p.m., closed on weekends. So these gaps are really fair value gaps where price moves in the underlying when the markets are closed, and then they open up, gapping up or down. I've been trading for 25 years, former founder of Options University, taught tens of thousands of investors option trading and Forex trading. So I've been around, been trading since E-Trade was a green screen and a flashing cursor. It looked like DOS back in 1999. So this is a pattern that I started recognizing that these gaps would tend to fill. This gap filled. All of these in yellow, the gaps have filled. And so right around the time that I was saying these are 100% accurate, guys, it stopped working for a little while. So these red gaps still haven't filled, and there's a number of them on the way up here that ultimately in the bear market may still go back and fill. But again, these are these IBIT trading gaps. There's one here that did fill down in this range right there. See that? It filled that gap and then pushed up higher. There's a couple lower I don't think we'll see happen during the bull run. But these do act as magnets. There's one here and there's one here, and so we're not too far from that. And that's what I'm suggesting. If we were to go down a little bit lower, that would coincide with that 90K on Bitcoin. And I'm trying to draw that, angle it over that magnet. So if we did come down a bit, maybe 10% more and fill that gap, it would actually give us a lot more to work with on the upside. Now, here's another reason why I think we roll over again. You can see as of 4 days ago, we had a new gap on the IBIT. So if I just draw that, this is an unfilled gap there. Probably, these do, again, they act as magnets. So I would not be surprised if, let me try to get rid of this here. I've got too many of them. Okay, something's gone haywire here, you guys. Let me just get rid of that and move that over. All right, the problem with this trading view is the tools sometimes get a little bit janky. There. All right, that's all I wanted to do. So this is going to act as a magnet to pull back down. The equivalent would be 100K Bitcoin, 98.5K Bitcoin. But if we get down to here and throw under down here, the buyers are at 56, but we have this bigger gap down and below. So the big question is, maybe we have another scary moment and in the markets overreact and fill that gap on a wick basis. Guys, I would be buying that. I would be buying that all day long. The markets love to overreact and do these throw unders and terrify everybody, liquidate traders, and then of course run it right back up after that. So I'm going to actually put a message on that and say IBIT gap closed. Okay, gap closed, and then buy, exclamation, exclamation, because I've seen it over and over again. These things calm down. I'll even draw a line to it so we can see that that's where it is. So if we see that calm down in some kind of like a scary moment, boom, we're going to, let's see, wrong tool, give me the right one there. If we see that calm down, boom, and then probably straight up to here, retest, breakout, retest, and then we're off to the races. So that's my best read on this, you guys. We'll see what happens. Good to have a roadmap, even if we have to adjust the map as we go. Okay, moving right along. What we have here on the next chart is my path to 150K, 200K Bitcoin. I've had this map drawn since about 2 years now, and nothing's really changed other than we've drawn some new angles, and it's actually playing out pretty closely. Now, what is this? How did I get to this? Some of you have seen this before. This Fibonacci study is the exact same study that exactly called the top in the last market cycle. How did we do it? We dragged it from the high over here in 2018, about 20,000, down to the low and extended that out. And look at that. It exactly called the market cycle top here back in 2021. at 69,000 and change. So that was the 3.618 top here on the Fibonacci. Now, I hear you. Some of you are saying, but Brett, wasn't this the high over here? Well, it's pretty much the same. I think the answer is no, it was not. The actual high was here, and this was a Wyckoff pattern, and this was one, it was a fake out up thrust after distribution to fake everyone out to going long, and then they rolled it over. Here nor there, it still called it pretty close, but again, I think this was the top, and we're going to go with that on that. So using that same study, we want to look at it here. Same thing, you guys. The Fibonacci drawn from the old market cycle high. This time I did use that secondary high down to the 16.5 lows, which I had forecast back in May, by the way. People laughed at me, but I correctly forecasted that bottom, and we have that documented. Anyway, not here to pound my own chest, but by the way, again, if you like this, please do like it and make a comment down below. It kind of helps more people see it, because now is the time to be paying attention. So you don't have to smash anything. Just go ahead and click that like button for me. Appreciate that. All right, what are we looking at here? So this blue line here, might be wondering, what is that? That is the exact same fractal from over here, right? Just kind of modified because it's a logarithmic chart. Modified that a bit to fit my my charts here, which is looking pretty good. It's playing out. I'll move it out of the way so we can see this in a moment, and I'll also cover the 10 reasons why, the 11 reasons why this is all coming into play. We've been tracking that for over a year and a half. So the 1.618, the Fibonacci from here to here, it projected 100K. We went right to 100K. I also said we'd have trouble at that big round number. Sure enough, that was an epic battle, and ultimately rejected down into this zone. What's important here also to realize is, and if you remember from geometry class, drawing a parabola, if you ever did that exercise where you're drawing lines at a slightly increasing velocity and slope, after a while you have that parabola. And we see that same thing in the bull markets. And generally, there's 4 angles to pay attention to. So we'll come back to all this and what I think happens at 150K, and you wanna stick around for that. But this is important as well. So we have the main trend line here, just to zoom out a bit, starting all the way back here in June of 2017, caught the bottom here, caught the bottom here, which was the COVID crash and Black Swan event. Also contained the low around in 2022 at 16.5. Okay, so that has correctly held. And then we had a higher low, so we drew this trend line from that point, and then we kind of came down in this range. So this is angle number 3. We have 1, 2, and 3. The blow off top on the parabola is that 4th angle, and we're seeing that play out in this new velocity here, or that new slope rather. And if I zoom out and move that out of the way, we've pulled back exactly to that line. So we really need to see that push higher and not see a 4th angle violation, because then we have to contend with maybe that's a triple top. And we don't want to see that. Breakouts usually happen on the 3rd or 5th attempt, not the 4th usually. So we really want the one to play out, and the 3rd one to break out from here to stick along with the timelines, and I think it will. So with that, where could we go? We could push right up to 150, maybe throw over a little bit, 160, 165. I will be taking profits at that 150 level, and 160, probably 70 or 80%, because more than likely we will get a 20 to 30% pullback, as we see in many of the bull markets. And in the old days, we'd see up to 50%. But I think with all the tailwinds and the ETFs and all the countries and states putting strategic reserves in place, that we won't see those big drastic pullbacks. However, taking profits there, this is how you can multiply your Bitcoin, which seems to be the topic on everybody's mind, especially my private clients. And one I just got off with saying that's my goal, is to get my Bitcoin stack from here to there. Well, the way to do that without playing with risky altcoins is to take some profits here. Even though you might have some capital gains, it's better, in my opinion, to take some off the table and sell it and then buy it back lower and then ride that gain the second time, that gravy train. Because I think what happens, pull back to around 140. The numbers aren't as important as our signals, and then probably another push up here. By the way, timeliness wise, end of June, this model shows June 30th hitting that 150K. Doesn't mean it's going to be exact, but it's possible. And then a summer pullback. I think alts could run here into around July, and then Bitcoin start running again and pushing up to these new highs around 200K as early as August, maybe September, October, but I think it probably comes a little early. Why is that? Well, we hit new all-time highs 2 months early, this time before the halving. So it's left translated by a few months. And you have to remember, this is a game of musical chairs. When the music stops, not everyone has a seat. Everybody knows that. Nobody wants to ride through the bear market again. People are going to be looking to exit early. If you want to ride it out to 300K and try that, be my guest. I'm going to be getting out at 200K, waiting to see if our signals are aligned on a rotation higher, and then maybe play with some of the house's money, but I will not be going back in there because that's how you get wrecked and give back your gains, and nobody wants that. All right, let's just touch on this a little bit too. The reasons here, we've covered this in the past, but I want to just revisit this. The potential path to 150K to 200K Bitcoin. When I started this study 2 years ago, there were 7 items. Now we're up to 11. The ones that are in green check marks have started to happen. And in the bag, the ones that are question marks are still in the wings, but they're slowly chipping away and starting to happen. And when these all go green, guys, it's going to be like a big forest fire. If each one of these is like a small smoldering campfire, as each of these get bigger, what happens? It turns into an unstoppable forest fire. So in a good way, without burning any trees and animals and all that. Okay, so BlackRock, Fidelity, ETF, we know that ETFs are here. Bank term funding program didn't really play out. It did end. We thought we might see bank failures and quantitative easing to save them. We could still see that. Banks are very exposed to the real estate bubble, the commercial real estate bubble, which hasn't burst yet, but is likely going to happen in 2026. Make no mistake about it. Also, the residential bubble is sort of 2 or 3 times bigger than in 2008, the financial crisis. Big, scary, looming recession potentially triggers all that. However, if it creates money printing, Bitcoin go up. Risk on assets likely will go up. Number 3, creative financing QE to pay down the U.S. debt. We have this $7 trillion in debt to refinance, and I was just watching a video how that debt is important because it becomes the asset for them to refinance the debt. And we're having trouble right now finding buyers for our new bonds and treasuries. And now I'm going to sidebar for a minute. While that's not a good thing, it makes a great case for stable coins. So I don't know if you knew this, but Tether, USDT, is the largest owner of U.S. treasuries in the world. Do you think the U.S. government is going to support Tether? Some people are worried. Do they have the money? Do they not have? They have the money. They're backed 1-to-1 with U.S. treasuries, and the government is going to protect them. Okay, that's my theory, and that's also why more and more stable coins are going through the bills in Congress. The government wants more stable coins to buy treasuries. You guessed it. So that's creative financing and QE to pay down the U.S. debt. But the more of that we can, the stable coins buy of this, it's actually a good thing. De-dollarization and USD hyperinflation. The BRICS nations still kind of out there. We don't know what's happening with that, and that may be a little bit down the road, but we'll see. But certainly, number 5, corporate FOMO, MicroStrategy. Michael Saylor is buying Bitcoin like a drunken sailor. He's buying in a good way, buying every Monday, it seems. And there seems to be no end in sight, so he's dollar cost averaging. By the way, if I'm just back from the Bitcoin conference in Las Vegas. It was amazing. If nothing else, go to YouTube, watch Michael Saylor's keynote, the 21 Rules of Wealth. It was even better than last year's in Nashville. I would actually watch both of them. So I was about 100 feet away from him, not even front row, sitting in front row on the floor because I wanted to see it and wanted to be near it. And the audience was electric. There was 20,000 people in the room at least. Anyway, check that out. And it's all happening. If you have a chance to go to the Bitcoin conference, you should definitely go. And by the way, I just uploaded a highlight reel on the channel of me at the Bitcoin show and the Bitcoin conference in the exhibit hall and giving you some flavor of what was there. And I'll be uploading some short bits of Michael Saylor, again, right up front of him giving a speech on that 21 Rules of Wealth. You're going to love it. So anyway, back to this. We're also seeing other companies, Tesla, Apple, BlackRock. We don't know for sure, but I think they just said Tesla and Apple have some on their balance sheet. I'm sure the corporate FOMO is happening. The MicroStrategy strategy of becoming a Bitcoin reserve, they're starting to adopt that, other countries and companies. And so that leads to number 6, U.S. country adoption as a reserve currency. We have the strategic reserve in place. Now, we have the $200,000 Bitcoin that we have secured that was confiscated in the Silk Road and some of the other things, but the president had to back off from the idea of printing money or handing a bill to the taxpayers to buy more Bitcoin. Originally, it was by $200,000 per year. However, they've devised a genius way of doing this. Maybe you've heard the idea of revaluing gold, which originally was valued much, much lower. And as a mark-to-market trick, the current value of gold is worth much higher. If they revalue gold to current market prices, they can afford to sell a bunch of it and still be ahead of the game and use it to buy Bitcoin. So that maybe is number 12 that I'll have to add to this list, because that could be huge. Assuming we really have all the gold in Fort Knox, which is another conversation that people are speculating on. But at any rate, they don't have to prove that. So let's keep going. U.S. country adoption. Now, this is important. At the Bitcoin conference, there was the president of Panama. Let me make sure I have it right. Maybe it was the mayor or the governor of Panama or Panama City. At any rate, there's a high likelihood that they will be the next country to adopt Bitcoin as a strategic reserve. Of course, in 2021, I was there as well when El Salvador announced they were making Bitcoin the national currency and a strategic reserve. Panama is now suggesting doing the same and creating an economic zone in that whole area. So maybe after Panama, you have Brazil or one of those other countries, but they're trying to create an economic zone or a zone of opportunity, and being very complementary to each other, working together. And if they do it, you can bet other countries will band together and do the same. So we'll see what happens. That could be happening anytime now. It was a great interview. You can also probably find that on YouTube. So what else? Post-halving, reduced miner supply. If you don't realize this, that every halving, rather, the hash rate becomes harder. They can only mine half as many because it becomes twice as hard. Half the supply, the miners generally are selling a portion of their supply to pay their energy, to pay for their ASICs. Guys, if you haven't been in one of the ASIC Bitcoin miners, I forgot. I was going to take a video and I didn't, because that particular one didn't have much in it. But they are the size of a container, like a container ship, or a small, maybe a large minivan. They're ginormous and they're expensive. $20,000, $30,000, $40,000 and up. So the miners typically are selling some of their Bitcoin to buy updated ASICs that can mine faster and to pay for their energy. But if only half as much Bitcoin is being mined, they can only sell half as much, leading to supply shock. So that's number 7. Number 8, less available exchange supply also. Now, you might be asking yourself, who's been selling Bitcoin? With all this good news out there, who's actually selling? And you know what? We finally have an answer. The whales, the early whales, have been selling Bitcoin. That's who's been selling. People who have been buying Bitcoin from the $700 range up until about $1,000 or $5,000, $8,000 are in huge profits, and they don't want to ride this all the way back down again, as they shouldn't. So that's largely who's been selling Bitcoin, along with the miners, creating some sell pressure, but that's kind of drying up. So look for, there's less available Bitcoin on the exchanges, and which usually leads to a supply shock and demand surge. And so all of these factors could be happening right now. We generally don't know until after the fact, because that's how the news says things. But show me the charts, I'll tell you the news, is my ongoing saying. I probably say that 100 times a year. Number 9, political support in favor of Bitcoin and crypto. Clearly, we have a very pro-Bitcoin administration. JD Vance, also at the Bitcoin conference. I recorded a number of clips of him, and very pro-Bitcoin. Cynthia Lomas was there, also spearheading the strategic reserve bill once again. And of course, President Trump, whether or not he understands it, he can probably barely spell Bitcoin. I'm just kidding. But I think at the end of the day, it's a very pro-Bitcoin administration. His family is interested in it, and I was there at Bitcoin in Nashville, where he said on day 1 he will fire Gary Gensler and the crowd erupted. And he looked around, and of course, he said, I'm going to say that again. So, look, it's a single issue voter for many of us crypto traders. We probably undoubtedly helped him get elected. So it's time for him to do his part. And so far, he has been. We'll see. Global fiat debt bubble, commercial real estate crash. I talked about that. These are checks, but they haven't really fully played out. The global fiat debt bubble is looming. The big, beautiful bill that President Trump is proposing is maybe not seen as beautiful by everyone, Elon Musk, and so it's potentially going to add 4 trillion or so to the debt, and so this is kind of a point of contention. But if we do head to recession in 2026, which I think we will, and we have a commercial real estate crash, which I think we will, and causing bank failures, which I think we will see, then that is also bullish for Bitcoin and safe haven assets like crypto. So that's number 10. We'll turn that green when that starts to happen a little later in the year. And number 11, flight to quality. Pension funds in the UK are starting to allocate towards Bitcoin. We have 401ks starting to do the same. Sovereign wealth funds are asking, not Jamie Dimon, but is it Jamie Dimon? Oh, I think it was Larry Fink. It was on record saying these sovereign wealth funds are saying, should I have 2% or 5% allocation to Bitcoin? Either one, massive surge, massive demand. And so the question does come up, are we bullish enough? We'll have to see. All right, so with that out of the way, let's keep going here. I'm almost done. I want to show you this very interesting study that we've touched on in the past. Now, this is an inversely related chart to Bitcoin. So I'll go over it slowly, but essentially, this is US Tether dominance. And as Tether goes up in value, that means money's flowing out of crypto, out of Bitcoin, out of Ethereum, etc. So, and when Tether's down, that's when we're seeing market highs, okay? So it's inversely related. In a moment, I'll put up a chart of the total market cap to show you how these are inversely related. But this lower trend line has been here all the way back since 2018. And every time this comes down to this trend line, we're seeing market tops. And we're seeing market tops here, right in here, about January of 2020. And let's see, am I doing that right? Up here is when we're seeing lows. Let me get to the more recent ones. So right through here, we saw that midsummer low. Money flew out of crypto and into Tether. So this push right into that June, July when we saw that midsummer crash, and then money flowed back into crypto and out of Tether. We came back to that support line, and sure enough, that was the market cycle top in November 2021. Then money flowed out of crypto strongly into this Tether chart. Okay, so where are we now? By the way, this is this, and we're seeing a very similar type of pattern. I think it's going to look more like this, which is what we're seeing. We had a little pop up here. So markets were weak this past week, but I think we're going to see this come down to the line as markets rally into the timing. Look at that, July of 2025. That's about when I was expecting, and then of course we'll see that crash and correction into the end of summer, into sort of October, and then we come down again toward the high. And so it remains to be seen what happens there, and we'll be following this. But make no mistake about it, when this starts pushing up, we have crypto correction zone, we have crypto crash zone, and we have the bear market. So right around in here, July of 25 range, we want to be looking for that first pump to that 150K range. Maybe it comes a little earlier in June. Here I have it drawn as July. We'll just have to see how that plays out. And then that second pullback here, maybe it comes down to this point. But that would be January of 26. I don't think we have that much time. I think this happens fairly quickly on this weekly time frame. Okay, so it's not exact. I have to massage it sometimes, but the dates do line up, and it's an interesting study that I've been following. All right, so moving right along, here's a study that I did that I had heard about, was a new top study, and of course I'm looking at, we have a very effective market top signal that let me call the top in November of 21. Also let me get in and recommend getting in January of 2023 around that 16.5 low. I'll show you guys that. Those are our proprietary indicators, but I'm also looking for other indicators, pi cycle top, the monthly MACD. Here's an interesting one that somebody had mentioned, and I recreated it. So what this basically says, this blue line is the 200-week SMA, simple moving average. And when the price goes above the SMA level, now this was way back when it was just starting, typically that is the market top on a timing standpoint. So we pushed up to there, and if we go sideways from this top, when the SMA broke this level here, at the same level, I just drew the line out, but it's that same level as you can see, and then that was the second top. So if we go sideways from there, sure enough, when the SMA got above this point, that was the top in 2021. So far, this has been very accurate. So what does that mean? The last top going sideways, when the SMA crosses this price, and would be whatever price this was over here all the way back, then that ostensibly should be the top. So if we get a nice push higher and this velocity goes up a bit like we saw here, I'm estimating seeing a top around November of 25, October, November 25. We'll see, but that is that range, and we'll have to see if that works again. So anyway, guys, by now, let me know if you have any questions in the chat, and if you want, let me just see, do I have any more charts loaded? Let's go back here. I do want to show you, let's see, come back to here, go back and show you that weekly time frame indicator. If you'd like to learn more about these signals, go to cryptomastery.org, because this signal right back here allowed us to call, and allowed me to call the market top, and subsequently a couple times. So my red alert, if you guys want my red alert alerts on the next market top and emergency alerts to get out of the markets, then go over to moonstream.io and sign up for one of our free reports, like the 3 biggest mistakes, I think it's the 5 biggest mistakes crypto traders make, or the free trade success checklist, and or learn more about what we do over there. So anyway, here it is on a weekly time frame. Once you see it, you can't unsee it. This red arrow is our early reversal indicator, a bearish one. It's not just an arrow. Inside, this was a pattern and an accidental discovery that I made with an old oscillator that we were going to deprecate at one point. And at the last minute, I said, my programmer partner, Joe, I said, hold on a minute. When the oscillator gets below 0, below 3 and on 0, and back above 20, within 3 time periods, it very often goes for the full oscillation. And similarly, when it goes above 80 up to 100 and below 80 in 3 time periods. And now, with many discoveries, you don't know why it works. You just know, hey, this looks like it works. So we coded it. Since then, I believe I figured it out. I think that this is catching programmatic institutional buying and selling, because the amount of volume and money and velocity to move a big float coin like Bitcoin or any coins within 3 time periods. Incidentally, it works on daily, weekly, monthly, and even for shorter time frames. But when we see that, and he programmed in a Keltner channel on things, you don't want to look at the actual oscillator, so we put arrows. We do look for confluence, so let's look at this. Red arrow, bearish engulfing candle as well. So bearish early reversal indicator, hence the name, bearish engulfing candle. And then we have our trend strength momentum indicator going red. When we see this alignment, we're highly confident that the market top is in, and that we have the bearish divergence. Each of these in and of themselves are not that important, but when we see that confluence, we are very confident in that. And we saw it back here, and we saw it back here. But right here, I said, hey guys, I know we think we're going to 100K, or we're going above 100K to new highs, but our red alert signals are showing us we're going to go lower, and we did. Same thing over here. So anyway, that's important. And here's the thing, though, and I will point it out. We need to push higher here, because if we go down on the weekly time frame, we have the makings of another market cycle top indicator. Bearish RSI Pro, bearish divergence, and we have the TSI going red. So this weekly close is going to be very important. I have the early reversal indicator red. I don't have a bearish engulfing candle, but we did last week. So it's a little bit janky, but we've got to push higher here, or I think this market is actually in trouble. So we'll have to see and be very nimble. I do recommend, and I'm recommending to my clients, have stop losses below 99K, maybe below 98K, in case that does happen. So that's about all I have for you guys, unless we want to go over to some coins on the daily time frame. I did mention we'd look at Solana. And let's take a quick look there. I know this video is running a little bit long, but there's a lot of good stuff in this video. So again, make sure you like that video. I would appreciate that, and we want to get more eyeballs on this because we do things a little differently here, as you can tell, and we like to keep it simple. So those two scenarios in Solana, it's in a nice uptrending parallel channel, and my squiggly line here shows generally this thing trades pretty evenly up down in this uptrending channel, but there again we have this potential head and shoulders forming. So with Solana, I think we do push up in here, and I'll show you on our 1 hour 4 hour charts how I bought this 142 level. We have our buy blocks here. Remember, the buyers are here, and if I go back to this chart, the 1 hour 4 hour, and go to the Solana, same thing. Now these don't always align on the multiple time frames, but in this case they did, which was great because we had confluence on the buy blocks. I think it might be turned off here. There it is, right down to this 142 range, and that midpoint, very powerful indicator. We saw it on the 1 hour as well, came right down. I had buy limit orders at 142. That's when you love being a trader, when you nail those entry points. So basically on the 1 hour 4 hour, and also on the daily. Likely we push up. I'll probably take some profits around 160 to 164 and see what happens. If we start rolling over, I'll be taking more of my Solana off the table. I won't sell all of it because Solana is a rocket ship and it can keep going higher, like we found out in 2021. I originally recommended Solana in our August newsletter, August 1st. It was trading at $37, and I said, guys, it's going to pull back most likely to $35. Put your limit buy orders in at $35. It did. We hit that, and it ran. We took profits a bit too early and waiting for the pullback that never came, and it went up 657%. So I would always be a little bit in Solana, but I'll be selling half in case we roll over and get a head and shoulders. And like the other one, let's just do this together. If we say that the neckline is there, maybe I'll move that a bit because the measured move, if we get this right, I think most people will get this wrong. The head is up here, and the what happened there? I need to grab my my line here. So the measured move, it's going to be a little janky because I'm on two indicators. I'm going to do it like this. So, and then I'll move it down. Got to grab the candle, trading view. Okay, there. That's the head to the neckline. Let me drag that down a little bit. So if we clone that, the measured move, if we lose the neckline, puts us down around 110. Okay, if we lose that neckline, and actually that neckline could be a little bit lower. So I think probably it gets down in this green zone again. Anyway, so that's why we really want to see this push higher. We have some sellers here on the daily at 165 and at 185. By the way, I did sell Solana here at 180. Why? That's where the sellers were. I can see it. Once you see it, you can't unsee it. So that's why you want to go over to cryptomastery.org. Check that out. Watch that video. There's about a 20-minute video that I do showing why these signals are so good, and I haven't told you half of them. If you're trading in these markets using RSI and stochastics and MACD, you're losing because you don't have an edge. You're trading against market makers, which are advanced AI algorithms. Trust me, they're not people anymore. They're computers, and everybody uses stochastics, RSI, MACD, and that means you don't have an edge. With these, you have an edge because we're trading along with the algos. We're seeing where the buyers are, both retail and institutional, and we're basically like a parasite. We're tagging along, but also seeing ahead of time where they are. People say, TA, you can't predict things. Yes, you can. You just have to have the right tools. So, all right, not to preach at you guys. I want you to win, and that's why I'm sharing this with you. And I feel I'll be doing you a disservice if I don't nudge you a little bit to get the right tools, get the right training. If you like these classes, by the way, and you want to see these live every week, I have an active trader group. You can learn more about that at moonstream.io/M3 for M3 Active Trader. I have daily chat and updates in a Signal chat, and we do a class just like this every Wednesday at noon Eastern. All right, so let's keep moving. So what else is moving? Ondo Finance, I still like this, but the DeFi coins, even though Ondo is more of a real world asset project, but still they're pushing the lower boundary of their uptrending channels. Hopefully they'll hold, but I like that there's buyers just down beneath. Some of these other ones not looking so good, like Lido Finance, DeFi not looking so great. Seeing a bunch of sellers coming in there. And rather than going to specific coins, let's take a look at total market cap, because we're also at a pivotal point, hitting resistance at this downtrending resistance line there, and trying to hold that 50-day exponential moving average. If we can break it, probably pushes up here to 3.5 trillion, pullback, breakout, retest, resumption. That's what we're hoping for. Now, here's why I think Ethereum, though, is really not doing too well. Okay, let's go to total 2, which is everything but Bitcoin. Look at all of that red. This is on total 2, mostly the market cap of Ethereum here. So many sellers right there. ETH coming down, I'm sure, because if we go to total 3, which is without Ethereum and Bitcoin, it's not as bad. We have some red in here, but it's not as bad. So I think at some point soon, we're going to see an altcoin season when this starts to run. But this blue is a fractal from a prior cycle. So we're just messing around with that. Not sure this does play out, but we can massage these sometimes and see at least what has happened in the past. You know, maybe we see altcoin season rally out of that. Total 3 looking ripe for altcoins, except for Ethereum. Okay. Solana is included in that, so I think Solana is going to be a big leader. Total DeFi not looking so good though. So Lido Finance, I've been lightening my positions there. I think Ondo still wins because they are more of an RWA and tokenization project. So anyway, guys, that's all I'm seeing here. Some green here and there. We had Sui down about 15% yesterday. Sui trying to bounce back. With a green candle bigger than yesterday's red candle, but I think it's going to have trouble here when it's below all 3 of these moving averages. I'm not going to chase these. I'm not going to get into any of these other coins. Certainly not going to be buying shit coins and a lot of these that are down below, or meme coins. Although I did buy some fart coin yesterday because it seems to be holding a nice support line there. Hey, you never know in this wacky world of these, like we saw yesterday with Trump and Elon going at each other. Bitcoin was down, Farcoin was up 10%. I'm like, you know what? I can't beat him, join him. I'm going to buy some of this. Anyway, we'll see what happens. And of course, Brett Token, the best meme coin name ever. And because it's my name, finding some support here possibly in there. I'm not shilling it, but anyway, just scrolling through. I don't see a lot going on. I'd wait things out. If you're going to buy anything, wait for Bitcoin to come down to that 100K range, 99.5, 98.5. That's where my limit orders are. And that's the only thing I'd be buying here other than Solana to run up to 160. And then, as with anything, you go as far as you can see. And from there, hopefully you can see farther. This is Brett from Moonstream Crypto. Hope you enjoyed the video. Again, please like and subscribe. Make sure that bell thing is on so that you're notified. I'm going to be doing more of these as we go into the bull market. And if you want to comment down below some other things you'd like to see, please do that. Also, tag anybody that you know that might need to see this, because we're up on our game here for you guys. And I've got some cool stuff to show you in the coming weeks. So cheers, everyone. Have a good weekend, and we'll talk to you soon.